Good morning and welcome to another early concise highlight on Friday, November 6th, 2015. It's currently 6:30 a.m. U.S. Central Time. Coming to you a bit early today because we want to get this concise note that's going to be purely market oriented out prior to the release of the U.S. employment report in 1 hour. And that's going to be very telling for a lot of markets. And the reason we can make this so concise is that much is the same as the video analysis from Wednesday morning's Global View and Thursday's Market Observations update below the video in that post that we waited until after the Bank of England press conference finished at 7:45 a.m. U.S. Central Time yesterday on Thursday. Very interesting views from the bank. That post is worth reading also, including the Thursday afternoon post, the late post of No Blarney from Carney. Some straight talk from a central banker. Very refreshing. And so, what does all this mean to the markets? And for right now, S&P 500, which is the only actual video analysis we're going to put in today, is steady at 2094. And it's an interesting market insofar as 2100 was kind of an old interim congestion, and it's been an over-under, of late, just as it pushed up to it within the last week or so. Couldn't stay below 2091 down break going back to yesterday. But, these are not the bigger supports and resistances. Bigger support is back into 2075 to 80 historically. And you see how once it pushed above it in the wake of the FOMC last Wednesday, mostly stayed above it with some slippage on the close going back to last Friday to 2073. But as 2073 was the high of the previous week when the market pushed up in the wake of the ECB, then, after the Fed pulling back at the end of last week below 75 but no worse than 73, that's still your key lower support. And typically the market never made it up to the beginning of the next resistances, first of which is the old December all-time contract high from back in July, 2114.20, but the bigger historic supports are up at 2120 and the 2132 all-time high of the lead contract set back in May on the little false up break, very quiet week above 2120 that ended up setting the top when the failure back below 2120 came the following week in May. So that pretty much does it for the short-term view of the S&P 500.